All right, but I will read the question over again. So, number 27, on June 7th, you received your coffee mugs and found that 2 of them were cracked. You requested for full refund. And how do you journalize this? So, again, we're going to recognize the date. So, 6/7, okay? And so, Lynette says accounts payable, right? How did we actually pay the vendor? How did we actually pay our vendor?
On account?
On account, correct. We never gave them money. So the one thing that they're going to do is they're going to give us a credit memo, right? It's going to reduce the amount that we owe. So same thing here, right? We're going to decrease the amount that we owe, right? And how much am I going to actually reduce my amount by? So from the previous scenario, okay, how much did we originally buy each cup for? $2.35, and it's going to be for a total of $4.70. Okay, can we include freight in this? No, we might actually have to pay ourselves to ship them out. But in this case, what is the vendor going to do with a broken mug? Okay, so they might just ship you out a new one. You don't need to ship it back for any reason. Okay, so accounts payable, good. We're going to reduce our amount by $4.70. Now, what account are we going to actually be crediting out of? Inventory. Good, which we already established as our mugs. Good, right? Because where did we originally place our first, when we made our purchases of the inventory, where did we place them? Right, inventory. It's already there. Okay, so now that since I placed it there, I didn't place it in a purchase expense or anything like that. So I now need to decrease my inventory because now I no longer have 100. I'm subtracting 2 out of it, and the cost of those 2 mugs was $4.70 each. Okay, good. All right, any questions in regards to this little thing here? No? Okay. All right, so 28. On June 8th, right, you sold 25 mugs for $10 each, and it cost you $3.37 each. Okay, assume sales tax, there's no sales tax, so all sales were made with cash. Okay, so how am I going to record this? Okay, we got cash debit. Nope. So we got cash debit. Okay, good. We're going to credit sales. Good. Now, all right, let's focus on one transaction at a time. Right now we're just recording our sales. So, how much cash did I receive for this sales? $250. Good. All right. Because there's no sales tax, I don't need to create a sales tax payable account. All right. Now that I finished recording my sales, I'm still under perpetual inventory, right? So what's my next account that I need to do. I need to update my inventory. Is that correct? So, no, there's no possibly. It is. It is. You need to update your inventory because that's the definition of perpetual, right? You're constantly updating your inventory, whether you make a purchase of an item or whether you sell an item. So in this case, what is my second account or second entry going to look like?
We're going to debit cost of goods sold.
We're going to debit the cost of goods sold, right? The cost of goods sold, right? It's pretty straightforward, right? How much did it cost me to sell my item? $3.37 each, right? I've already did calculations above, so $84.25, you said? Okay. Now, which account am I actually taking out of? From your inventory. Exactly. Because that's how you adjust and you adjust your inventory, right? You only have one place to place it. Now you sold the items. They don't exist anymore. So we're going to take it directly out of our mugs because that's where we placed them, right? Okay, and it's going to be for $84.25. Okay, good. And then when we actually look into this, we're going to be updating our inventory worksheet as well. Okay, and that's actually where we solve for the cost of goods sold to begin with, and then we're going to go update it afterwards. So in this case, here we are, $84.25. Good. All right. So here, this is what it looks like when we purchased our inventory. We updated our inventory, right? We have a debited amount that we have to take out inventory because we're making a return. And then now we sold our inventory, so now we got to also take it out of inventory, right? Any questions in perpetual inventory? Yes. Yes. 100%. No matter where you're dealing with, you're going to add it to inventory or you're going to subtract everything out of inventory. So let's go ahead and let's answer this question here. All right. On June 10th, a customer returns a coffee mug for a full refund, okay? And you sold each coffee mug for $10 each, and it cost you $3.37 each, okay? So record this transaction. So this person is returning 2 coffee mugs, all right? So what are we going to place here? What is our journal going to look like? A customer is returning 2 coffee mugs for a full refund. All right, and assume they paid with cash. Because the original transaction, it was everybody paid in cash. Okay. Are we receiving cash or are we giving cash away? No worries. Anybody want to try? Okay, so let's first focus on the transaction at hand before we update our inventory. So what is my transaction right now? We're looking at a refund. Who is refunding? Are you refunding to the vendor or a customer?
The customer, so it's account, returning allowances or something of that nature.
Which one? There's two of them, right? Returns and allowances is correct.
So you're asking, is that a debit or a credit?
Yes and no. Is it a sales returns and allowances or is this a purchase returns and allowances?
Sales return allowances.
It's a sales returns and allowances because we are the vendor. And then our customer is attempting to return to us. So therefore, we need to recognize as sales returns and allowances, right? Now, before I continue, I placed it in there in the very beginning. Why? Why is my sales returns and allowances going to be a debit account?
Is it a contra account?
It is a contra account. And what is it a contra account to?
Sales.
So in this case, sales, right, from above, we know that it's a credit, right? So now we're taking away our sales by 2, and now we need to debit the account. Okay, and we're going to debit the account for how much? $20, right? Because this is a sale to a customer, right? We're going to take the selling price that we originally sold to this customer. So in this case, they're returning 2 at $10 each, which gives us $20. And how am I going to refund this customer? With cash. Good. For the same amount. No sales tax because we already established there's no sales tax. Okay? Now let's look at this very, very carefully. Did the customer give us a full refund? As in, they returned the product to us? Yes, they did. So in this case, did we sell that item? Well, no. My question is, did we sell that item? No. What are we doing? Okay, so what account should come first? Inventory. Good. So what was your inventory that we established it before? $3.37 is going to be $6 and yes, $6.74. Okay. What's our credit going to be now?
Accounts receivable.
Not accounts receivable because this person did not owe us money.
Cost of goods?
Cost of goods sold. So this one is going to be a flexible account, right? This one that you can debit and credit as many times as you want, right? In this aspect, we're reversing the items we sold. So therefore, we need to credit the amount that we originally sold for, right? We're reversing that transaction because a person decides to return the item, okay? And of course, you wouldn't actually place it back into inventory like that, right? You would have a separate account for that. But this is just understanding the concept. What happens when a customer actually returns an actual product to you, right? You're going to reverse the transaction, right? Give back the customer their money, and then you're going to place it back into inventory and reverse the cost of goods sold because you didn't sell it anymore. It's back into your inventory, okay? And it's going to be back into your inventory for $6.74. Okay, good. Now we're going to be moving into chapter 8, actually conducting our little worksheet over here. So let's go ahead and take a look. Okay. Okay, I'm going to say the following information, okay, use this one with the table below to answer the next questions, okay? So here's the most important information that you need to take away. Your tracking and your costing method are perpetual LIFO, okay? Last ones in are the first out, okay? So let's go ahead and go in each scenario. So what happened on June 1st? Mm-hmm. Mm-hmm. Good. So, go ahead. What was that? So, we're going to skip all this. Okay, so inventory on hand is going to be 100 items, and it cost me $1 each. And my freight was $25. Okay, so what was my purchase expense here? 100. Total. Good. And the cost per item is now $1.25. Of course, my table's smaller here, but when you guys get your actual inventory worksheet or utilize the inventory worksheet, it's going to be for the full table. Okay. So, good. Now, what happened next on June 10th? Mm-hmm. Okay. So, on June 10th, you bought 200 toys at $1.25. Freight was 50. So, what is my total purchase price here? $250. And my total cost? $300. And what is my cost per item now? $1 and $1.50. Okay? All right. So then what happened on June 12th? Okay. So June. That's fine. We also refer it as COGS as well. So 200. We sold 200. Is that correct? So June 12th. Let me double confirm. We sold 200 items, okay? If we sold 200 items, right? What method of calculations are we looking at? Okay, what I meant was what method or what costing method are we using? LIFO, yes. So that means we're going to take from the bottom, which we recognize, which you recognize as 150. So good. Now that we actually look at this, right? We're actually going to sell out the whole entire 200 because that's what was available and that is what we sold. So in this case, you don't need to do the calculations because you already know it's 300. But again, I'm just going to fill it the information so you know what it is. Okay, so here I sold 200 items, okay, at $300. So this whole entire thing is going to be eliminated. Okay. What happened next on June 15? Mm-hmm. Okay. let me go ahead and indicate that so you guys know that this is gone. Come on. Oh, yeah, it's this one, right? Yeah, there you go. Actually, oh, what the? I'm on Word. So, it should be able to, oh, right up, it's right here. Okay, so there you go. I eliminated that. So number 300 at $1.50 each, and freight was 75. Okay, so what is my total purchase price here? 450. All right, 525. 1.75. Go ahead. All right, what has happened on June 20th? You sold 250 items. Okay, so on June 20th, you sold 250 items. All right, what is my cost per item going to be? Which batch am I going to be taking out of? The first one or the second one? Or I mean the third one? The very last one for $1.75. Now in this case, am I taking the whole batch of 300? No, I'm only taking a portion of it. So in this case, I have to calculate it cost per item. So in this case, what is my total calculation here? $437.50.
It's okay for that.
That's correct? Okay, good. So what I can do here is, well, with Excel, right, you can just type it in. But in this case, I just want to make sure that you guys know. So I'm going to cross that out, right? Because I know I have 150 left. Or I mean, I have 50 left, right? And it's going to cost me $1.75 each. But what was my 525 minus my 437? $87.50. Good. All right. Now I have my ending right here on June 30th. You have a total of 150 toys on hand. All right. So this question says here is, what is the total cost of your ending inventory? So say that again. $212.50. Yes, $212.50, right? We added our 125 and we added our $87.50 to get $212.50. Good. All right. Now this question says, what is the total cost of your cost of goods sold? So let's go back up here. $737.50. And do we have that? Yes, we do. It is answer number 3, $737.50. Okay. Good. Now here is the next question here. Use the following information in the table below. So again, it is identical to the problem above. So what I'm going to do is I'm going to copy this information. Actually, no, I can't copy this information. I can only copy the information that's pertinent to me. So in this case, let's see. what happened. So in this case now, my tracking and my costing method is going to be perpetual moving average. Okay, so we need to start from actual square one on this one because now we're dealing with a moving average. So in this case, what happened on June 1st?
Purchase 100 at $1 each with $25 trade cost. Total of 100.
Good. Boom. All right. Now, what was the next thing that happened on June 10?
Another purchase.
Good. Another purchase of how many?
200 shares at $1.25 each. Divided equals 250. Plus the 50 shares is 300.
Now, in this case, we know that it should be $1.50 per item, right? But in this case, we're looking at a moving average. So what is the additional step that we need to take in order to know how much inventory we actually have?
The overall total cost.
Okay, so what's my total cost here?
50. So far right now, that's 425.
And how many total items do I actually have?
300.
300. Okay, so what is now my average cost per item?
1.4166.
1.41666667, right? Okay, cool. All right.
Excuse me.
Yes.
Excuse me, Lynn.
Mhm.
Tennyson, can you please mute your mic, please?
I'm sorry about that.
No worries, because I'm trying to pay attention is all.
Okay.
Thank you.
Okay, so we got um okay, so we got 425 total, and we divided it amongst the 300 items that we have available to sell. Okay, so then now what happened on June 12th? I'm sorry, June 12th.
200 shares at $5 each.
Okay, so we sold 200 items, right? So this is where I didn't specify on rounding your answers at all, okay? Except for here. Oh, wait. Okay, in your exam, it's going to be like that. But here, I'm going to assume that I'm going to collect my piece of information, right? And I'm not going to round right away. So I'm going to go ahead and keep this 1416667, right, in my calculator. And how much total am I going to get from here?
I calculated only the 150. Up to 5 decimal points, that's why. I think 283.33. I might be wrong there.
293.34.
293.34.
Mm-hmm.
Okay, did anybody else get that same exact answer?
It should be 33, right?
Yeah, my bad. I
I
don't
got
forget the one.
283. I got 283.33.
283.
I'm not sure.
Okay,
Yeah,
so
right. 283.334.
0.334.
Mm-hmm.
Okay, so 33. All right. All right, anybody else? Okay, so we got 3 people that said that's the answer here. So what I'm going to do here is now I'm going to eliminate it from this exact amount. So I'm just doing this for calculation shows, okay? Not to, whatchamacallit. This is for just purposes of just making sure that you guys know what you're doing. So here I'm going to eliminate 200. Now, I need to eliminate the exact amount here because this is what I'm going to be journalizing. Okay? So that means I need to take in the exact amount out. So I need to subtract the 283.33, and then what should be my new total? What is my new total? 141.67. Okay, good. And then now I have to recalculate my new average cost per item because, again, you could be off by that 1 penny. And because we had to round for this scenario here because of journalizing purposes, now we need to recalculate our average cost per item, and it should still be the same. It should be 14167. And that's it. It stops there. It doesn't go any beyond that. Okay? Good. Now what has happened next? On June 12th, we already sold the 200 items. Now we're on June 15th.
Oh, I'm sorry. June 15, purchase another 300
At 150 and 75.
each with a cost of 75.
So now we are increasing 300 at $1.50 each, which should give us 450 plus 75, which gives us 525. Okay. And now what do we have to do now? Yes, we got to calculate a grand total. So in this case, what is 525 plus 141.67? Say that again. 161.
Oh, I'm sorry. I'm checking I calculated the cost already for both. I'm sorry.
Oh, okay. So it should be 66667. Oh my gosh, these are bad luck numbers. Okay. 66667. All right. And in this case, how much is my average cost per item? 1.666667. Okay. All right, I'm going to double check this. Good. 1.66667. Blah, blah, blah. Wait, actually, hold on. 66667 divided by 400. Okay, so it only goes to 4 sixes and then it goes 7 5. My bad. So 475. Okay. All right, and then lastly, what has happened on June 20th?
Sold 250
Mm-hmm.
at $5 each. So 250 times at a time.
So 620, we sold 250 at $1.6667. Oh, one more 675. All right, can someone tell me what is my total cost going to be here? 41668. Anybody else get that too?
I'll round it off to 69. Because I calculated them. It came up 416.6875.
It's 6741667.
41667. Yes. Lynette, you have 6687. So in this case, you rounded the other one. All right, so in this case, it is 41667. Okay. And then you can also take the time to go ahead and subtract that out. So in this case, I'm going to do subtract 250, which should give me a remainder of 150. Okay. And I am subtracting 41667 to give me an even number of how much?
250.
250 even?
Yes.
Yes. Okay. So then now my average cost per item is going to be it should be the same. Okay, good. Now we ended off on an ending inventory with an even number. So what can we say here? All right. What is the total cost of your ending inventory? Boom, 250. Okay? Boom, 250. All right. And then what is your total cost of goods sold? Okay, so now we have to go back and calculate. What is 283.33 plus 416.67? So you should get an even number here as well. 700 even? Okay. 700 even. And let's see. Yes, boom. $700 even. $700 even. Good. Good. All right, any questions in regards to perpetual inventory? So again, this one is the easiest kind of mentality because, you're calculating your total purchases and you're subtracting out your total amount that you sell. And in this case, right, the numbers did come out evenly, like I said, okay? So, again, for the exact example that we have in the exam, when you do moving average, I'm going to tell you specifically your answer needs to be rounded to the nearest penny for your answer, okay? So for the ending inventory, your answer needs to be rounded to the nearest penny. Okay? And yes. Any questions?
I get confused when I was calculating that particular question. The one that the moving average.
Mhm.
What I did was I added all this now, the quantity, the total quantity, and then I divided the total cost of all those three purchases,
Uh-huh.
and divided it the total quantity of the total purchase.
Now
So
remember,
came out with a different. I have my question on my note here.
that
How
is weighted average.
and add. Okay.
Okay? So you just calculated weighted average, and we only do that for periodic. And in this case, our average is moving as every time we make a purchase, we need to update our inventory and update our average cost per item. Every time we sell an item, we need to do the same thing. We need to calculate that, update our inventory, and then recalculate a new average cost per item. Okay, so that's why it's called moving average versus opposed to weighted average, right? Where you're just taking the whole total cost and dividing it. So again, this is similar to weighted average, except for every single time you make a purchase and every time you make a sale, you're just going to be updating it constantly. Okay. So in this case, you switched up periodic with perpetual.
So you calculate again the cost of item every time you
Every single time.
and then subtract whatever.
Correct. Correct.
Next.
Mm-hmm. Okay, so right now it is 10 o'clock or It's 10:10 now. I have to let you guys go on a break. Okay, it's already been an hour and a half of class. So let's call a break now, and then we'll continue doing our lower cost of market when we come back. Okay, so I'm gonna call break, and let's take a nice 20-minute break. So please be back by no later than 10:30. Okay.